Good morning, afternoon, and evening to all the viewers listening to us from whichever part of the world you may be. Tonight we have got with us Neil Twa, who is the CEO of Voltage Holdings and the founder of ASIN 360 Pro, and he's our guest tonight in Advanced PPC Week arranged by e-commerce. And tonight he's gonna let us know why and when Amazon PPC fails. So I'll let Neil continue from here.
Hey guys, thanks for joining. I appreciate you. The question on the table is why Amazon PPC can win and why it can fail to a degree. We're going to answer some things around that. I know, as I understand it, there are people of all levels of selling in here. So I'll try to define anything I may say that's language that you may not understand, and we'll talk about the beginners and intermediate and maybe some advanced things as we go along. I think the simplest thing for people to understand is why does in the simplest context, why would PPC work for one seller and not work for another seller? Why does it fail in its term? It may not actually be a failure. It just might be a decision as the business owner you make to determine what is considered winning for you. What's your number versus someone else's number? Now, in its most simplest terms, you have to have a good product, no doubt. You have to close that loop in the cycle of that product to the customer. If you don't do that, then everything we're going to talk about in the next few minutes doesn't make any sense at all. If you're just selling widgets and you're trying to sell the lowest cost value product, please understand that at least in the US market, that is going to fail you ultimately. So you want to create a great product because that actually backs into your ability to reach the right kinds of customers and be rewarded by Amazon's systems. For more traffic and propagation, and of course, lower cost ads, which is what a lot of us want. We want the low cost ads. We want a good tacos. We want decent cost numbers, but yet we still want to scale and grow and increase profitability, right? Those are most of the key metrics we want to see occur.
Yep.
So to do that, it really, in my mind, PPC is actually a reverse of what you might think I'm going to tell you. It is finding the great product in a great market competition with good profit or great profitability, which is the first thing that Voltage focuses on in terms of our metrics. If I have profit enough to acquire the customer, then I want you to hear what my strategy is, and then you can learn how to adapt that for yourself. To get that product in that competition, a market share, I'm going to go in and buy up all the available traffic and market share, mostly at costs that others are not willing to sustain, but I'm willing to do that because I'm going to prove to Amazon's algo and system that I am the better product. That means I will run my ACoS up to 125% or more to acquire those customers into my brand. Now, when I see certain metrics occur, then this will work. It will work because I have the profitability to do that. It will work because I understand my market and competition and how to approach them correctly. And it will work because I have more products than just one to sell to them in my brand. And it will also work because I will see a lower total ACoS, tacos, once I see certain growth in my organic brand rankings. Then I will see even a lower tacos than my ACoS goal. So I may be running 125% ACoS and acquiring all the customers that you and I might be competing for, but my total cost of sales, average cost of sales is going to be lower, right? It could be as low as like 7%. So how does that relationship work? It has really to do with understanding that in the PPC world, Amazon is set to win. In my mind, they're really stacking the cards similar to going to Vegas, right, and playing. But you got to know the game well enough. You got to know what you're playing enough to understand how the game is sort of rigged in favor of Amazon, but then how to correctly navigate that so you don't just give them money for the sake of giving them money. And when I'm talking about running 125% ACoS, I'm not talking about just giving them money, to be clear. While I may be paying more than the cost of the initial acquisition for said product, what I'm going to do through the PPC is I'm going to see that reciprocal organic ranking come back. And when that ranking reaches 40, 50, 60% of my sales, I'm going to increase my budgets because I'm going to continue to acquire those customers that the engine is sending to me instead of sending to you, now my competition. And you not recognizing what's happening, maybe because you're a new seller or you're immature in the market, or you're just getting to a novice selling stage in your business and model, have not understood that people like me on the market will acquire the market share of whatever it costs to acquire that. I will take the leads at what it costs to acquire those leads, and then I will make them profitable through my additional marketing. Okay, through the additional products I have, through packaging, emailing, and other things. I will shoot for something right out of the gate that I want you all to understand, and that is a customer lifetime value of 12 months at $1,000. Okay, I want those customers that I acquire to spend up to $1,000 with me in the first year of their existence with my brand. When you understand these metrics, you understand why I will play a much more aggressive PPC game with my product launches than most people understand when they are learning how to do PPC. Does that make sense, Osama?
It does, but I've got a question for you
Sure.
that at Voltage, how you guys manage to find so many products? Because I've been on asyn360.com and I've seen the feedback from your clients,
Yes,
and it's amazing, and all of them are happy with the services you provide.
correct.
But I'm curious to know that how do you guys do that?
So one of the things we developed a long time ago was a very concise understanding of Amazon's engine. All right, this filing system inside of Amazon. All right, it's run by an artificial intelligence. The world refers to it originally as A9. Now it's referred to as the A10 engine, which is really just the A9 with new wheels.
Okay.
It has upgrades and leather seats and air conditioning in the seats. It's really still the core of that original engine. There are just updates they made to compliance bots and other things to try to make competition and fake reviews and other things be as fair as possible in the system, so that they don't verge into antitrust areas, even though they're initially being told at this point that they've gotten close to some of that, even with their own house brands, which is why just in the last week or two they've actually started to say they're going to shut down their house brands to try to avoid
Okay.
any positions of antitrust with the consumer, which is cool. It's great for those of us who are in the brand market, but at the same time, we never really felt we were competing with Amazon anyways, because they have the lowest rated brands across their own system, and they were the lowest profitable brands anyways, so they're out the door. So why are we finding those products? Is because we have a data set, right? We have a data set and an algo that we developed when we understood how the engine has been running, and for literally the last 9 years, we've been developing our process of evaluating and establishing product research and profitability of product first. We stayed
Okay.
focused on those fundamentals, while others have tried to
Okay.
game the system with reviews and play all this cat and mouse stuff. While the rise of FBA arbitrage and wholesaling and all this other stuff has risen up, we stayed focused on branding with private label brands and stayed very focused on the fundamentals of the business first, and profitability and growth, sustainable growth through the business, and then scalability and exit. Okay, three primary focuses that Voltage has stayed focused on. So when we do that, we bring our clients into a very good understanding of the need of the money, the capital, the product type that actually will go out and compete at a level of significant value by launching 8-figure brand expectations. Okay, we have an 8-figure brand expectation in my company for our products. We simply extend that expectation to our clients and then show them exactly what it's going to take to go to that market based on time, money, and activities that they will complete. So when they come and get involved, they understand very clearly they're going into a domination strategy. They're going into an expectation of the time and the capital and the requirements necessary to do that. We're not telling them that you can do a 7-figure business in year one with a couple $1,000s. So right out of the gate, we're setting a very different level of expectation with our clients. We're giving them the tools and technology that we have developed to go out and do that faster and easier, and to find those products based on our data set. Okay, we've done over 100 million in sales from ourselves and our clients. Our largest case, it's actually way more than that, but I don't like to say it because it sounds really weird. But it's closer to $500 million in sales. One of my largest students had done over 45 million a year on Amazon, right? From the 0 to 45 million. They did 60 million before they closed it down. They had an additional 120 million in direct to consumer sales on top of the brand they started with Amazon, about a $200 million a year company. So the end result is I understand scale, and the products and the customers we go after in Amazon are the ones who are more solution and affinity based. They want to pay for higher product quality, so they're willing to pay more. And because of that, there's more profit in it for us. And because there's more profit in it for us, we can attack the system a lot harder. And so we found about 6% of those products in Amazon that reach those goals. And that's 6% of the product database that meets our about 49 different criteria data points from all of our clients, our successful products and the niches within them. And we simply just go and launch those products. And then we continue to test those products until the system rewards us.
So Neil, if you had to choose between entering a market that is saturated but with a differentiated product versus going into an emerging niche, what would you choose?
So I would go into an evergreen niche in which the profit sustainability has shown itself year after year after year, because I'm not about how many units I move. I'm about how much profit per unit I will move. Because there are
Right.
thousands of products in which I may only sell 1,000 units a month, 5,000 units a month or less, but I can move many of those products in the marketplace with lower threshold of competition. I can buy up the market share very quickly and they're profitable. And by profitable, I mean a minimum of $12 in net profit per unit, usually closer to $20 to $50 in profit per unit. And so I can do things that others cannot do. I can launch a hardcore PPC campaign for 90 days, buy up that market share, and then start tapering that campaign down to the point I can even shut it off. If you think about it like booster rockets on an engine, you don't, the major lifting is done to get the rocket into space. Once it's up there, you have a second stage rockets, very much smaller and not as powerful, to get it in there. And then you're in cruise mode, okay, as it's circling around. We do something very similar in our PPC campaigns. It's an inverted relationship. Okay. We see organic go up, PPC come down. And I have case studies within my group, and I've shared those in the public sphere on other podcasts where my clients have gone on to the podcasts and explained what we did with them, and in explaining how we shut PPC campaigns off because we basically got into the top metrics, top position. Organic growth is continuing. Their profitability per unit has obviously gone up greatly because they're not spending the PPC ads as much, or in some cases, not at all. And then they're basically in cruise mode. They're going like 70 miles an hour down the freeway with cruise on, right? And the organic growth of their brand and metrics is continuing up in the system. It's a strategy we deployed years ago, and we've tested hundreds and thousands of times across products. And it's just a process now.
So Neil, since the CPCs in Amazon US market especially are
Yep.
so high, how can we end up with profits? What should we do?
So you need to understand, obviously, the difference between when I started almost 10 years ago and 20-cent CPCs, in some instances 5-cent as CPCs, have now gone up to an average of about $1.35. So in some cases, up a little bit higher as an average of CPC costs. That is not a metric I track. Honestly, I know it and I see where it's at, but it's not the metric. What I have is a click to sale ratio. For the amount of clicks for each keyword, I want to see a sale and a click to sale ratio that is programmed into an AI system that we use that manages the PPC campaigns. And based on that click to sale ratio of the keyword and the volume of that keyword, as well as continuously harvesting additional keywords as organic rankings come in, that click to sale ratio has to be there or the campaign isn't working. So with that specific metric and the profitability and ability of us to buy that additional traffic and customer because we have the profit, means we have a mechanism in place to go out and explode that and continue to grow it.
All right. So Neil, a lot of members of our community have a similar background like yours. They
Uh-huh.
are working for corporate firms, but they are still not sure whether they should start on Amazon.
Sure.
So what would you recommend to them, and why should they do an Amazon business?
Yeah, let's start with the cons first because it always sounds like everybody always talks about the pros and it's always,
Yeah.
big things and big money and revenues, this and all that stuff. And as you can probably figure out, I really don't care about that. What again I care about is maximizing profitability for my clients. We have an exit in mind for each client within 24 months. We need profitability management to be at a certain level. We want to see a multiple channels beyond Amazon. So Amazon for us is just an incubator channel. It's the first channel to go quickly into market to validate product and brand and conversions and audience and avatar, while being able to grow scalability in that channel. But once we validate that, once we understand that, once we see the conversion ratios and stuff going into 10 and 20 and 30% on our unit session percentages, we now know that we have market viability. So we're going to take it out direct to consumer. All right, we're going to expand beyond Amazon. But that's a whole different ball of wax. I have a saying in the country out here that you can't ride two horses with one ass. All right. So you got to pick one to ride. And so for those who are brand new, who don't understand traffic and conversions and Facebook ads and Google and all that other paid traffic and media stuff, Amazon is a great place to start and incubate your business because there are 4,000 sales a minute already. There are customers who are buying products that you can sell and make slight innovations to already. There is a market full of buyers right in front of you. And so new people can get an easier ability to get started and learn the business of e-com. Okay, first, how do I make an e-com business? How do I handle products and logistics and marketing and branding and these kinds of things, which are important to learn? And then how do I learn how to work with Amazon? Now, Amazon is a beast. It's not a partner for you. Let's just be clear. It is a system that you have to manage. At times, it's very finicky. At times, they will take your ASINs offline because something occurred in the AI and it shuts you down temporarily. So one of the things we understand about the system is when working within what we call brand defense. How do we structure our business to defend ourselves against competitors, Amazon's AI system, and others, so that we have a fair shot at ensuring all ASINs are online for as long as possible, and then quickly mitigate any issues that occur because they can occur daily at times, especially as you get larger with more SKUs, more problems. Okay. So there's processes and
Yeah.
SOPs that need to be in place to deal with those as you grow beyond 1, 2, 5, 10, 100 SKUs. So as an operational system for newbies, it is a great way to learn how to get started in e-commerce, how to brand a product, even if it only takes 10 minutes to do that, how to learn to innovate products and create private label and go through the whole process of establishing a single product unit sale of something that you created. All right. If you don't have the Facebook marketing funnel technical experience over on this end to get people to actually see your product, then Amazon is a great place to go in. Even with all of its challenges, even with all of its cons, there is a great place. Where people will fail, at the last bullet point on my list here, is to not profitably acquire a customer understanding of the product that you're selling and all the numbers and metrics required for you to take home money from that unit sold, and to truly understand how much you're taking home before taxes, appreciation, etc., and know that you're actually going to put that in your bank account. Okay. And
Yeah.
not get caught up in the other minutia of trendy marketing, etc., but have a basic and very strong understanding of the fundamentals of running an e-commerce company first. You understand how that works, and the other aspects of this, will be learned because they're mechanical. They're not actually related to the success. My virtual assistants and other people, and we have 14-year-old kids working with their parents, building their own companies now off the success of their parents' companies, because it is not rocket science, but there are complexities in it that you have to understand to overcome. Otherwise, it can be a really great way to get on the highway of e-commerce and
Yeah.
make really good business.
Yeah. Okay. So Neil, do you have any clients from Pakistan as well?
I don't have any clients from Pakistan right now.
Okay.
A lot from my experience thus far, most of the people I've ran into who are selling from there are usually doing more of the retail arbitrage kind of stuff and the online arbitration. That's just been my experience. I wouldn't
So if
mind
I want to be your client, what do I have to do? What do I need to do?
you have to talk to me first. So I get
Okay.
solicited from thousands of people to work with us. We are a consulting and mentoring firm. Therefore, we choose our clients. We are not, just to be very clear, we're not a course or a traditional make money online or nonsense of this nature. We're a
All
consultancy
right.
that advises companies that are very large on how to do this. We were approached to become an Amazon aggregator last year, had a verbal commitment about to be papered for $100 million in investment for acquisitions in the space. We chose not to do that. We chose to stay focused on more boutique growth and performance related goals. So people need to speak to me. I want to find out who they are. I want to understand what they're doing. As I mentioned at the very beginning, why do my clients brag about us? Why do I not? Why do we do mostly referrals and not major marketing? Why have you maybe not heard of me before? It's because I'm not out here selling courses. I
Okay.
am
So
building businesses when we're acquiring these companies. We just acquired interest in a very large MLB branded company here that's going to go out and it's going to expand the sales and marketing. I have my own brands and business to run, but I love to show people how to do what we do. It's a business relationship first. And then when they learn how to do this, it creates a networking and opportunity. So I've only had a couple hundred people get involved in what we're doing because I do chat to everybody and I want to make sure that they're going to be a good client, a long-term client. We have clients that are 2 to 7 years old with us and what we do. And, I just like to make sure that I'm working with the right people for what we do at the level of business we're working at.
So if you've got the right person from Pakistan as an investor, what's next? How does it work? Can you brief about that?
Yeah. So in simple terms, it's very high touch. We go through an application process. I make sure I qualify you on, the capital, the needs, the revenue activities, things we're going to do together in the next 12 months. that we work with you, what our expectations and goals are for profitability as well as growth and scalability of the business, because I'm setting you up for a 24-month exit in this business, okay, and showing you how to repeat this process in like a franchise like model. But I don't take your ownership. You're 100% owner and CEO. We take a little bit of profit split in year one as part of a performance goal. But other than that, my goal as a mentor and a leader in this is to not make you dependent on my system. It's to make you an expert in what you do so that at some point you might even become a coach at it because you're so good at it now and because you do very well with it. So we'll go through that process. We make sure you understand what we're going to do in 90 days. So you will learn what the 90-day goals are going to be together. We do live coaching calls, one-on-one. So that's why I also don't take a lot of people in this, because we do a lot of heavy mentoring and a lot of process-based stuff. But I give people the products. I help them skip the product research by handing them the successful products, by handing them my global sourcing agent based out of New Jersey, by handling, all the supply chain and logistics stuff and giving them all those connections and leads that would take them years and millions of dollars to establish. I've already done all that in the business we're working right now. So I simply hand that to them in a trusted capacity. And the goal there is quick launch, scalability, and growth as fast as possible with the highest amount of profit. So we walk them through that process, and we ensure that in 12 months that we hit our goal. And our goal is 100K in net profits in year one, what I call base case performance. Could they do better than that? Most of my clients do, but I would rather you understand the basic results with the 12 months. So that you understand the ROI of coming in and being involved with us and the capital requirements of inventory launching and our marketing strategies, and that you're set up for success because you will become a dominant brand in the marketplace. That's one of the reasons we work with a few clients, because they come brand dominance when we get through with them.
So when we started our conversation, you mentioned that if you need your PPC to be successful, it depends on a good product.
Mm-hmm.
But can you recommend, or do you have a favorite category or something like that that you
Well,
can
it's probably
recommend
easier
us?
to tell you what I don't sell in than to tell you what I
Okay,
have sold in or where we're managing accounts or helping our clients right now. We
okay,
don't go into electronics. It is
okay,
oversaturated. There's too much manufacturing defects and customer support heavy, as well as a constant need for iterations and iterations of innovations every 6 months or less to stay up with market. It's a very labor heavy intensive, lower profit, but high volume niche. So we don't really mess with that. Plus, you got to have at least $250,000 in capital now to go to market to really compete with some of the bigger brands like Anchor and stuff, who were one of the first brands ever to sell on Amazon all the way to $1 billion. And so there's a big, saturation niche in there, and it's very hard to carve that out. So we don't go there. We won't go into nutraceuticals or supplements. We owned a company that started on Amazon years ago and got very successful. We taught some of the largest brands like Dr. Tobias, which is one of the biggest brands out there now on Amazon. We started them when we got going with this gentleman years ago to help them establish that brand. He sold it for 8 figures. But it's a very heavy competitive niche. Again, it could be good profits, but the competition leads to less saturation and more to, let's call it, nefarious difficulties within the system, that you're constantly playing cat and mouse with other larger corporations who simply don't want you touching their market share.
okay,
And the last place we don't touch is clothing. While clothing can be very profitable, it is also, if done correctly with the branding, not like t-shirts. Okay, we're talking
yep,
about branded apparel or higher affinity apparel. It's a lot lower volume, which is even less volume than I'm willing to accept for the profitability. But it's also high returns. So yeah, Amazon has overcome some of those recently by giving you like a 7-day period to buy the product and try the product and then decide to send it back or pay for it after 7 days, which is cool. They're trying to overcome that problem, but it is still a big problem. So other than that, everything else is fair game. And we've sold in pretty much all those categories and have clients selling in all the various other categories that are out there.
so how do you pick a product and then look for differentiating and adding value
Yeah.
in that product? How
Well,
do
the
you?
product has to be metric driven, right? So, so your question is
Okay,
almost a little bit emotional, but I'm going to reverse that and answer it from a statistical and an analytical. There's actually a
okay,
scientific method we developed called a green light spreadsheet, in which we
okay,
go through with 47 data points of data that all mathematically based on competition, volume, estimated sales, profitability, and all the necessary costs to move one unit from manufacturing all the way through customer acquisition to ensure profitability, while ensuring our ability to grow the PPC campaigns and overtake marketing share. So that process is a digital data-based analysis process. It's meant to keep you from paralysis or overthinking the product too much, but to look at the opportunities for competition versus saturation, profitability, market share potential, knowing exactly who the competitors are, down to, there are 7 competitors I'm going to go after. These three, or these three, and these three or that three, and really understanding how you're going to overtake each segment of those different competitions in time, not all at once, but in time, that each of your metrics and your profile portfolio metrics within your seller health account can achieve greater than the bottom 3 people you're going to compete with in the market. And then you're going to approach the next 3 and eventually the next 3, and then you're going to be on top. That may take you 12 to 18 months to do it, but in time you will become the dominant tier brand. So it has to be products that have longevity. They're not usually seasonal. They usually have very great profit margins in them. They are smaller in size, but I don't necessarily care if they weigh more. I care more about the profitability. Remember, because people get hung up a lot on these perfect
Yeah.
unicorn ideas of product. Well, it has to be this much profit and this much weight and this much this month. I'm actually looking for something very different, right? And when the data tells me, I test. We do what's called micro investing. So we will multiple test products. Like if, for example, it's an investment strategy. I won't put 5 million into one company, but I'll put $1 million into 5 companies. Do you understand the difference?
Yeah.
Because at this point, I'm now spreading my risk over multiple locations, and I'm putting a higher probability that one of those companies will take off. And when it takes off, it'll make back the profit or the costs I put into the other business plus profit, and it will overtake the other 4 that either didn't do very well. It's not that they didn't sell. One of them failed completely, whatever, it just failed. And the other 3, sort of did okay at different levels. It's not that they didn't sell or that they weren't necessarily selling. It may be selling a little bit less than the profitability I wanted them to, or they simply didn't reach the sales and velocity to overtake those different segments of customer competition. So it just forecast down the line that this is a product that you could get married to because it's making sales. It sort of looks profitable, but in actuality, it's going to fail you, okay, in the long run. So then I'm looking for those additional products that basically come and rise to the top. So I'm willing to test more of those product variations at the beginning in that first 90 days than my competition is usually willing to do, especially those who are going to go to market and compete with us at any time in the marketing phase, right? So because of
I
that, I'm now opened up the engine's capability to help me determine exactly which size, shape, color variation, segment, node, niche, etc. is going to be the most dominant in that place. And I simply follow the data.
Interesting. So, Neil, you are the CEO of ASIN 360. Can you let us know does ASIN 360 offers?
So ASIN 360 is the training within what we call our voltage business builders. All right. So business builders is the mentoring and coaching. The ASIN 360 game plan is really the game plan in detail about what we've kind of been discussing around here today. How to approach the product correctly, know the products will be profitable, know the market and segmentation of your customer avatar very well, down to not just what they'll buy from you the first time, but what they will buy from you up to $1,000 over the next 12 months. And then understanding the scientific aspect of the marketing campaigns in PPC. We need to see certain metrics being hit, and it has nothing to do with how much I'm spending. It has to do with how much I'm acquiring. So that's an inverted relationship. I hear a lot of PPC people argue about how to lower your A cost and all this stuff. Well, if I'm not willing to lower my A cost to take up market share, are you really going to be able to compete with me? And the answer is probably no. You understand? Because I will
Yeah,
go out and
yeah,
buy those customers away from you, and you will be
yeah.
arguing over the lower A cost. And I will say, I don't care if I'm spending 125%. I'm looking at the total advertising cost of sales and how much those customers are buying from me. You and I are already not competing with each other yet because we're not even competing on the same metrics. Does that make sense?
True.
So at
Yeah,
this
yeah.
point,
It
then
does.
I'm looking at the organic ranking and the keywords. I'm looking at the viability of my product rankings within the system as it's responding to this strategy, right? So we teach people how to understand what the engine actually wants, what it doesn't want. What people are saying over here is usually a lot of nonsense, and this is all we want to focus on over here. And then that sets them up for what I call my platinum principle, which is a part of the core foundation of the business mentoring. That's, we teach them as the e-commerce, and then we teach them Amazon FBA, and then we help them open multiple channels beyond Amazon FBA. So we're going beyond this, okay? And that is that literally the expectation that the businesses are worth more in value when you sell them at any time during the business building phase. Can they cash flow positively? Absolutely. They can be great little profit machines. But money today is worth more than money tomorrow. Economics 101 of inflation. Okay. If I can return 3 years of profits today, that money is worth more now than if I waited for the cash flow to come in over the next 3 years. You understand?
Yeah.
If I know this system correctly and I know I can compete in other niches and markets with products, I will just go do it again. Only I'll do it more capitalized and I'll do it faster. And then I can repeat that process over and over again. And that's what Voltage teaches people to do within our game plan, how to repeat that process over and over again, to do what I've done for the last 9, almost 10 years, and what I will be doing for the next 10 years, growing multiple brands and testing and launching and executing and exiting.
Awesome. That's really interesting. I'm quickly going to take some questions that we have
Sure.
for you.
We might have a few.
So, can you summarize your take on a new launch in
Yeah.
terms of PPC?
So you need to consider you need to consider more time in your launch phase than you've probably heard to date. Most people will tell you, we have a 30 or 45-day launch process. They may even say we have a 7-day launch phase. Well, 8 years ago, we were doing 7-day launches because we could. That has extended now in the years later on up to 90 days. Okay. So our launch strategy and process in terms of the PPC is to over a 90-day turn in that product launch. We want to see certain metrics occur in that 90 days with our PPC launch. And when all those things are happening, then the engine inside Amazon is rewarding us with longer term product market saturation and distribution across Amazon's campaigns, not just its PPC, but its organic systems. Basically proving that I'm the better product than the products that currently exist, even if they have 3,000 reviews already and I have 0 when I go to market. So when we
Yeah.
do this, we're basically telling the engine, not only are we a serious player, we're here to buy, we've got the profit you're looking for. And oh, by the way, we smell, look, taste, and feel better than the competitors that are currently there. And that means when we launch, we will look at a curve of purchasing, like a bell curve, that will exceed sometimes up to 150 to 200% ACoS during that time frame. Okay. So if you're looking for a launch that says, well, I'm only going to spend $100 or $1,000, you should understand I'm looking at $5, $10, $20,000 or more, because I'm going to look at the reciprocal ROI of that product launch in the next 90 days as you look at a quarter by quarter. And I'm going to say, is that returning my investment? Am I seeing organic growth? Am I seeing the market share overtake, the profitability continue? Because again, I'm in it for the longer game. And I'm not saying, because it says Facebook user, I don't have a person to say, I'm not saying that I'm not considering the profitability of the growth. I'm looking this at 12, 24, and 36 months. And if you're not, how are you going to
Yeah.
compete with me in the market?
True. Got it.
Cool. I'm not sure I got the answer to that, and that may follow. There may be a follow-up question to that, but please ask if I didn't summarize that correctly for you.
All right. We've got another question.
Okay, so if the product is launched in June 2022, the product is ranked, indexed, and all super relevant keywords. Product ranked on page 1 also, but sales still are not coming. Why? Listing, image, and offer price are optimized. What is the reason for it not getting sales? That's a great question, right? There are about 100 things that pop into my head at this moment that are variables of why. Let's just try to get to the fundamentals, maybe down to the simple fundamentals of why that could be occurring. There are, you mentioned certain relevant keywords. Well, if it's relevant, is it a buying keyword would be my first question. If you are not acquiring sales, then that's a different problem. If you are acquiring sales from some measure, organic or PPC, but it's not, you're not making the money you think you should be making, that's a different problem. If you are getting, impressions, okay, you're getting traffic, but no sales, then your unit session percentage, what is known as your conversion rate, simply does not match up with the buyer intent. You've missed it. You might feel like you have a really great listing and all things look really good, but if you haven't acquired one sale since June 2022, and we're now into July, coming up on August, you have a conversion issue. Now, again, that is an assessment of this very broad question to dig in, and you might want to ask a follow-up question here, Saeed. But the end result is conversions. If you've got impressions and you're getting traffic, but no one's buying, you simply have missed the conversion metrics of your listing. You have not correctly dialed in the language and the relevancy of that language to the buyer. And they're simply clicking off and buying someone else's product. That's the most fundamental answer, I believe, to your question.
Okay. So I've got a really interesting question for you, Neil.
Yeah. So how much minimum required for joining Voltage as a new investor? So in terms of, let's just set mentoring fees aside for a moment, because in full transparency, there are mentoring fees. I don't work for free, and you shouldn't either. So at the end of the day, I ask my builders to have a minimum of 25K in go-to-market capital. All right. So that 25K is going to assume this factor. You are brand new. You're a zero who's looking to go to be a hero in that 12 months with us. You have no assets. You have no experience in e-com. You're not currently selling, but you want to get started with a completely new brand. Okay, that's going to pull brand assets together, product and inventory, licenses, business LLC registrations, trademarks, and other brand defensible assets before you sell a single unit in the marketplace to show Amazon we're very serious, to show our competitors if they mess with us, we'll be able to deal with it. All right, because we're not coming to just be a side hustle or a hobby business. We're coming to play games. All right, we're planning to play the game to win. And to win is to take over market share and exit that brand and niche in 24 months. So minimum is 25K because we're going to go to market pretty hard. We're going to test a number of those product variations, and then we're going to have a next tranche of money in that 25K that is going to be used for buying products that are winning, more inventory, because we don't want to stock out. All right. We don't want to stock out for something that's working if at all possible. It's a bad metric. Everybody understands stock outs as an issue. If you don't understand that as a new seller, here's an indicator. Don't stock out of FBA if at all possible. Okay. You might stock out of FBM, but you should understand, pro tip, it's different. Okay. So when you're getting that, just to be clear, that is going to be your go-to-market capital. What it takes, okay, in your cash flow plan after you launch, after your products are working and they're starting to sell, what does it take to get to the next level? How much capital is required? It's answered by the business. It'll be answered in the cash flow and sales of your business based on demand of sales. Okay. If you launch a product with us that takes off to 100 units a day, and you're now going to, have 1,000 units, you're going to have to order maybe 2 or 3 or 4,000 units. That's what it's going to take because you're selling now. Congratulations. But it's where a lot of people miss the wave, because I see a lot of sellers who get in and they get started and they don't have that next capital set aside. They don't have the next means, the network, the ability to get that through other people's money, OPM, or their own cash flow or whatnot. And they simply don't reach the wave. There is a wave on Amazon in the algo. And I don't know if anybody's ever talked about that on here, but when you follow that wave with the algo, it will reward you with marketing, distribution, and channels. And you have to be able to ride that wave when the time comes. Otherwise, you will find yourself losing in the market. You'll lose market share. The algo will penalize you at different levels within your seller account. Those you may have a completely green seller health account, but you're like, why am I not selling? Why am I not ranking? Why am I not taking more market share? Why are my campaigns not working? Why? And it's because you've been penalized by the algo, and you won't get that back. So hopefully that was an answer to that in terms of what you were asking with the question there, and why. It's more important to understand
This
why.
is exactly how I'm feeling right now, but I have to ask you, Neil,
Yes, sir.
that do you have any free stuff like blogs or case studies out there, maybe on your website?
I do have a podcast called the High Voltage Business Builders Podcast, where I share a lot of information with ecom. I give tips. I bring on some really great people. They have to have a minimum of $1 million a year in net profit business to be interviewed. And most of them are very high net worth individuals doing great things in big places in business. It's worth listening to. I also have a 3 free day series training in my emails. If you go to voltagedm.com, Voltage Digital Marketing, voltagedm.com, you will see the podcast media. You'll be able to sign up and get some of that free training. It's a 3-day live event that I just recently hosted that you can watch the replays on, which go through the 4 big topics, 5 of them technically, where I break it down in detail about the product analysis. I give you some spreadsheets. I kind of show you a little bit under the hood. And I encourage you to go check that out and, listen to some podcasts, check out the media and guest spots, and just get to know me a little bit more. I'd also encourage you to Google me or DuckDuckGo me or whatever search engine you use. Mainly because you'll find all of that information plus more. What you won't find, and why I encourage you, is to go listen to negative YouTube videos or blog sites talking about scams or any of the other crap that you might find out there, simply because it's not out there. It's not like I'm a super genius and Elon Musk here with a giga, Cray computer that's out there scrubbing the web. It's just not out there. And it really has to do with a testament to the Voltage business, my clients, and the people that we do work with. As to ensuring the integrity of business and reputation, which is very important to me, which is why I choose everybody that works in my business.
All right, on this note, we're going to wrap this up. Thank you for the audience for being with us, and thank you, Neil Twa, for being our guest. We've had an amazing session with you. Thank you so much. Hope to see you again with this community and see you all guys tomorrow 10 p.m. with another session with industry experts on Amazon PPC. See you soon.